The gentleman from Nebraska, Mr. Flood, is recognized for 5 minutes.
Thank you, Mr. Chairman. Chairman Powell, after a year with very high inflation that battered American paychecks, inflation rates have moderated some. However, inflation continues to linger above the 2% target rate set by the Federal Reserve. In fact, the PCE inflation index has remained above 2% for the last 3 years. The Federal Open Market Committee's statement on longer-run goals and monetary policy strategy issued at the beginning of the year stated, and I quote, "The committee seeks to achieve inflation that averages 2% over time and therefore judges that following periods when inflation has been running persistently below 2%, appropriate monetary policy will likely aim to achieve inflation moderately above 2% for some time," end quote. Chairman Powell, does the commitment to achieve a 2% average over time apply in the other direction as well? Meaning that if inflation remains above 2% for a protracted period, would the committee instead aim for inflation moderately below 2% for some time in order to achieve an inflation average of 2%?
No, it doesn't.
Is it fair to say that you would need to see the PCE index dip below 2% at least once in the coming months in order to contemplate a rate cut?
No, that's not fair to say. We've said that you don't want to wait until inflation gets all the way down to 2% because inflation has a certain momentum. You wouldn't wait that long. If you waited that long, you probably waited too long because inflation will be moving downward and will go well below 2%, which we don't want.
What combination of factors would you need to see in order to support a rate cut this month or in September?
So once again, I'll say I'm not sending any signals on any particular date of any meeting whatsoever on policy. I said that yesterday and I'm saying it again today, but I will answer your question. So what we said is that we want to be more confident. We want to have greater confidence, and that means more good inflation readings. That inflation is moving sustainably down to 2%. Greater confidence that that is the case. But remember, we have a dual mandate too. We're not just an inflation targeting central bank. We also have an employment mandate. So I could also see us cutting, and we've said this, I've said this, if we saw unexpected weakening in the labor market. And we do now see, I'll say, speak for myself, I now see the risks to the two mandates as much closer to being in balance. I think for a long time we've had to focus heavily on the inflation mandate, but I think now we're getting to the place where the labor market is getting pretty much in balance to where it needs to be. And so we're looking at both sides.